ask you one question. Do you ever use support or resistance levels, draw it on the chart, and afterward watch how the price are going in the another direction of your personal trade? It happens because the smart money traders know about this, and in common technical analysis strategy it doesn't work because retail traders are using it for entering the trades, but the banks use it for their liquidity accumulation. And in this video you're going to know how to avoid these traps, how smart money manipulates by it, and after the end of this video you will never watch as the support and resistance levels in a previous way. Follow my Telegram channel where I'm going to drop all my trades and all lessons materials, so let's get started. So welcome guys to the chart, and the first thing what we need to do is look at the traditional support and resistance levels in the classical technical analysis. Let's watch on this example. We have a BTC 1 day time frame, and here I draw support and resistance levels, and what retail trader are gonna do in this situation if he use technical analysis and not smart money strategy. On these meanings, after forming of support level and resistance, he will wait for the price coming to one of these zones, and from that meanings we are going to open a position into another direction. For example, let's look here. In this example, candle touch our support level, and retail trader are gonna open a long position with risky stop loss and not any trading plan in this situation. And of course, you're gonna see the success of his deal with the price reverse from these meanings. But after that, we can see situation like that. Liquidation. It happens why? Because on these meanings, what I mentioned here, the great amount of liquidity are accumulated, and smart money traders need to grab all this liquidity to let the price go to the highest part of the chart, and only after that, only after grabbing the liquidity on the top of the chart, it's gonna reverse or not. We need to see by the hours confirmation. So if you use technical analysis in this situation, we are gonna be liquidated. So what we need to do in this situation if we use a smart money strategy? To define our support and resistance levels, in our concept we need to take a Fibonacci grid, and if we have an uptrend movement, we need to place it from the lowest point to the highest point, like that, or into another direction. And now we can see our support and resistance level here, like that. But in the smart money concept, it's called supply and demand level, or in our way the premium and discount market. In the discount market, which are situated under the meanings of 0.5, the price are gonna grow because it's discount zone and all they want to buy by the lowest price. And in the premium market, it has a too high price for the buying, and the price are gonna go down. So in this smart money situation, we can see our optimal trading entry, which are situated in the meanings of 0.6 and 0.8. And here we can see our Fuji, which are formed here, and it is situated in the discount market, which are give us a signal what the price here are gonna grow. If we have an uptrend movement, and here we can be sure what we have an uptrend, and here we can place the deal like that, enter from our Fuji zone with a conservative stop loss with a good risk ratio about 1 to 6 or 2 to 6%, or the conservative stop loss like that. Let's make a 3, so let's search. The price gets our deal, and if we place the trade like that, we already has a 1 to 3 risk reward ratio, and here we can close 50% of our trade, which are gonna bring us a really good profit. And on these meanings we can close all the deal or close about 80%, transfer our stop loss to the safe zone, and just wait for our successful deal. So now let's dive deeper into smart money support and resistance levels. So like I said before, the smart money doesn't have its own support and resistance levels, it's only use it for preparing for the price manipulation. We are waiting for the liquidity grabs to open a good deal into the side where the banks are gonna open it, not the retail traders. We are waiting when to lose and open a good deal, and to define the best zones, the supply and demand zone. Let's repeat again. In this zone, we have a discount market, lowest prices, and by these prices want to buy Bitcoin or any share, everything what you can think in your head, because these rules always work in the same market, on the every time frame, active what you want to trade. And if the price goes down, this means it's situated in the discount market, the lowest price, and here we need to see a good place to enter our deal. It can be Fuji, which I showed you the previous example, or the order block and other things. And with discount and premium market are the best way to trade the sideways movement, not like in technical analysis. Here in the red zone we have a premium market where the price are too high to buy, and here we need to see a zone for the reverse of the price. For example, after the price formed a high low and high, this go down to the discount market to get best price, and afterward it's go up from the our point of interest zone. So let's sum up some things. The smart money doesn't have its own support and resistance levels. This concept only use it for liquidity manipulations and waiting for the liquidity grabs to enter a good deal, because the markets are not so stupid to give you free money just entering from the liquidity zone. It's very stupid, and all persons in the world are gonna be rich using this concept, but technical analysis doesn't work. I showed it on this example. And here we have our optimal trading entry zone. If we have a correction from the discount market and Fuji in the OTA zone, it's gonna be a good entry point for you. Here we have our Fuji, here we see a liquidity gap on these meanings, and afterwards the feeling our Fuji the price go up, and it is the best deal you can entry on this chart. So let's move to the another example. So now let's look at the Ethereum time frame. Let's mean our support and resistance levels by the classical technical analysis methods, and let's watch and wait for the entry the deal. If you entered here, you're gonna be liquidated just in one day. We don't want to trade like that. It's not our way to trade, it's a loser way to trade. In this situation, we are going to grab our Fibonacci grid, grab it from the lowest point to the highest. Find our PVG zone in the optimal trading entry zone, which wasn't fulfilled, for example here, and from that we can enter a good deal with a good risk-reward ratio. And let's watch what will happen. Successful deal. And if in this situation we are gonna use support and resistance levels, we are gonna lose like every one of you who use technical analysis. It's a stupid and dumb thing. So there, another example, one level here, one level here. For example, we are waiting for entry in this zone, is a trade like that, and what are going to happen next? Boom, we are gonna be liquidated. So let's watch in this situation. What we can see here, the resistance levels and support level. Let's watch for the price. I think boom, the price come up to our liquidity zone. We are talking on smart money, and you are gonna be liquidated if you place the stop loss in every minute what we want time. But what we are gonna do in the smart money concept, let's take our Fibonacci grid. We have a downtrend movement. Let's place it from the highest point to the lowest, and what we can see here, the FVG bota appeared in the optimal trading entry point. We are placing our dip like that with a conservative stop loss or the capturing of this liquidity or this liquidity. Think your own mind, and let's wait. We are in the deal now. So here we can save or close our 50% position and already get a huge amount of money. We are already in profit. We move our stop loss into zero loss zone, and it is successful dip like the previous. And if you trade by the technical analysis methods, by the support and resistance levels, you lose money here and you lose money here if you are entered to the reversal movement. So I think guys, it was very pleasant to watch my video, and if you like it, follow my Telegram channel in the link in the comments, drop some likes, and follow this YouTube channel for the more lessons of trading. Goodbye.